Welcome to The Explainer. Today, we're doing something a little different. We are jumping right into the high-pressure world of a day trader, and we're going to follow him in real time during one of the most volatile moments of the day. Now, this isn't some textbook example. This is a front-row seat to the real, raw, psychological battle that happens between a trader and the market. And it all kicks off with just a few words he said right as things started to get crazy.
So yeah, too crazy, man. Too crazy. Ridiculous. Those are the actual words from the trader we're following. You can just imagine him saying that, kind of under his breath, as he's watching the market do something that makes absolutely no sense. It just perfectly sets the tone for the chaos we're about to dive into.
And just to be clear, this isn't some made-up scenario. We're about to see his actual plan, how he put it into action, and maybe most importantly, his raw, unfiltered reaction when the market decides to fight back. And believe me, it fights back hard.
So let's set the scene. The story kicks off on a Tuesday morning, August 12th, 2025. And this isn't just any old morning. The market is already tense, you know? It's like a coiled spring just waiting for something to happen, for some kind of catalyst to set it off.
Okay, so at 8:30 a.m., we get a big piece of economic data, the CPI, which is an inflation report. Now, everything about this report, at least according to our trader, suggested the market should have gone down. But what happens? The exact opposite. It just rockets higher. So right away, you've got this super confusing, contradictory situation. And this is all happening right before the opening bell. I mean, talk about a chaotic start to the day.
So when you're faced with that kind of craziness, you can't just wing it. You can't just guess. A trader needs a system, right? A playbook, a framework to help them make decisions when their emotions are screaming at them. So let's take a look at his.
He calls his system SuperAreas. And you can kind of think of it like a map that he lays over all that market chaos. What it does is it pre-calculates these really key price levels. And one of the most important levels for today is something called R2, which stands for resistance 2. Basically, it's a price ceiling, a point where he thinks the market might just run out of gas and turn around.
So with the market just surging up like crazy, his system is telling him to do something that sounds, well, a little counterintuitive. It's signaling a clear strategy: sell the highs. He's basically betting against the trend. He thinks this big move up is overdone, and he's planning to sell or go short at what his system says should be the peak.
And here we go. This brings us to the moment of truth. The analysis is done, the strategy is set, and now he's got to pull the trigger. It is time to act. It's time to place his bet against this raging bull market.
And there it is, 23,785.25. That is the exact price on the NASDAQ where he gets in. He clicks the button, he's in a short trade, and now he's officially betting that the market is going to fall from this price. The trap is set.
Now, to really feel the pressure he's under, you gotta understand the stakes. See, he's not even trading his own money. It's what's called a funded evaluation account, where he has to prove he can trade profitably. And here's the kicker. If he loses $3,750 in a single day, poof, the account is gone. So his logic is to take a relatively small position, just 5 micro contracts, and make his bet right there in that R2 resistance zone his system pointed out.
Okay, so he's in the trade, his plan is officially in motion, but you know the saying, the market has a plan of its own. And this is where the real battle begins.
Almost right away, the market just keeps pushing higher. It doesn't just ignore his entry point, it blows right past the previous high for the day. And that's the first major warning shot. The market is basically telling him, nope, this is not going to be an easy ride for you. And just like that, boom, he's underwater. He's immediately looking at what's called an unrealized loss of $370. Now, it's not a disaster yet, but seeing that red number on your screen, it's just this constant nagging reminder that you are on the wrong side of the market.
And this slide really paints a picture of the absolute pressure cooker he's in. This is total cognitive overload. So while he's trying to manage his own losing trade on the NASDAQ, he's also watching the S&P 500 hit all-time highs. He literally says, Ethereum is going banana, gold looks weak. And then you have this totally random news headline pop up. All of these things are flooding his brain at the exact same time his own trade is bleeding money.
Yeah, it's gotten too stupid now. You can just hear the frustration, right? But this isn't just him complaining. This is an observation from a trader who's looking at the price and thinking this is completely disconnected from reality. But he's still in the trade.
And then the pressure just ratchets up another level.
The NASDAQ doesn't just keep going up, it explodes higher, hitting 23,851. That is a brand new all-time high. Just think about that. He is now shorting the market at the absolute strongest point in its entire history. The guts that takes.
So while the market is making history, his losses are just getting bigger. He's now down $700. Remember that daily loss limit, the $37.50? He's already burned through almost 20% of his entire risk for the day, and the market is giving him zero signs that it's going to stop.
You know, at this point, the charts, the system, they can only tell you so much. The fight really isn't with the market anymore, it's with himself. It becomes a battle of pure, raw, psychological discipline. And there you have it. Before he finally signs off his stream for the day, the NASDAQ hits one more high, 23,877. This is the absolute peak of the pain for him. The highest point the market moved against him, and the moment his paper loss was at its worst. You've got to imagine every single instinct in his body is just screaming, "Get out, cut the trade, stop the bleeding."
But this is what it all comes down to. He says it out loud, he acknowledges that urge to panic, and he consciously pushes it away. He literally tells himself, it's okay. He's making a deliberate choice to trust his plan, to trust his system, even when the entire market is screaming at the top of its lungs that he is dead wrong.
So we leave him there, holding a losing position against a market that is literally at an all-time high. All he has to rely on is his system and his own nerve. It's the ultimate cliffhanger, really, and it just perfectly sums up the fundamental question that every single trader has to face, probably every day. Where do you draw the line between discipline, sticking to your plan no matter what, and pure delusion, where you're just ignoring the overwhelming evidence staring